Good morning. This is a video morning brief of the U.S. stock market. I'm Rich Paz for Critical Point. Wednesday, March 19, 7:47 a.m. Eastern Time. Today is Fed Day. They'll wrap up the FOMC meeting. So at 2 o'clock, they're going to tell us what they're doing with interest rates. Then there's going to be some text out for people to read or what they think of things. And then, of course, Powell will have his speech section and questions and this and that. And so it won't be to like 3:30 or to 4 going into the close that we'll know what the market really thinks of all of that. Okay. All right. Any rate, yesterday the market, this is the 6-hour chart of the futures, by the way, for the S&P 500. It's a rolling chart, so it's still operating off the March. We're going to roll to June here, I think next week or in a few days. I forget now. Maybe it's this week. Any rate, I guess it is this week. Any rate, what we're going to have is yesterday's decline was larger than I was anticipating personally. And I think the model was leaning that way. The model jumped on that momentum and said, what's going on is instead of a level 4 bottom there, it was there, okay, and maybe even there, all right? And so I just said it's about a latest allowed for level 4 bottom. And I got excited. I was even going to start day trading or intra-week trading to the downside, and then I pulled out, okay? And it did a good thing. It just didn't really want to go down for the rest of the day. I think they were preparing for the Federal Reserve, and I think they're going to prepare today, and they might prepare to the upside, seeing that they probably sold yesterday. Now, what the model didn't like about yesterday's decline was that they had a pretty good prior day. It was decent volume. It was good demand. And then it just kind of, yesterday they just walked in and said, oh, we'll just sell it all back. We don't want it, okay? So I still think we're topping out for level 3, and this market is going down into next week and maybe the following week. But I don't know as we've really topped for level 3. We've come up with an alternate scenario, okay? So let me first talk about the level 4s. What's going on is the model is saying yesterday's high wasn't a level 4 top after all. It was too soon. In fact, I shouldn't say after all. It knew it was too soon. It wanted it later in the day. Remember I said like 1 p.m. in the day and later? And instead they just sold it, okay? They couldn't help right out of the box, right after the open gate. They just sold, all right? And then the rest of the day, there was still a little net selling, but there was kind of like a little bargain hunting holding it, and it was really just less business the rest of the day. It just kind of sat there and picked its head up just a little bit. Normally, if I have a level 4 bottom, I assume it's going into a level 4 top, and normally I would say it's probably going to take a while yet if I use the high, the recent high. But the model is saying that recent high wasn't a level 4 top, and it wasn't yesterday either. What it's really saying, it ought to blip up today, and today's the latest for level 4 top. I think it's actually going to top ahead of the Fed Reserve, but I don't know for sure because that type of report and event can get people to do goofy things that doesn't make a lot of sense sometimes on a very fast trading. If you zoom out, it makes sense, or it simply doesn't matter because you're following something longer term or something, all right? So I'm in favor of just a little blip up this morning, and then it's just down into like tomorrow, okay? And maybe even the next day. And I think it's a topping process for level 3 as well, all right? Now, how I could be wrong is I often forget. These level 4 patterns are 70 or 80% accurate. That means 20 or 30% of the time it doesn't work. In reality, even some of that 20 or 30% was there. You could see it. You just couldn't trade it. It didn't work that well for trading, but analytically, it worked. So the real wrongness, if you will, is less than 20 or 30% wrong, okay? So it works quite well. It can really be up 90% accurate, really, from an analytical point of view. But you might not be able to keep up with it and deal with it, and neither can I sometimes, all right? Anyway, nevertheless, I suppose, just visually, momentum-wise, technically, we should say the top on March 17 was a level 4 top. And we're quite confident the low yesterday was a level 4 bottom. If so, the market, okay, should move higher towards the end of the day and maybe even higher tomorrow, which means they may like what the Federal Reserve says, or at least whatever the Federal Reserve says doesn't interfere with them wanting to buy this yet again. So this level 4 is a little bit iffy on us, sloppy, if you will. I feel confident it's a bottom. So if we later today into tomorrow see this trade below 50 650.75, or you just round it off at 5650 if you'd like. See it do that. I think you want to assume there's a new level 4 downtrend regardless of what's going on with the tops. And it can be down tomorrow and maybe into the next day. So write that down. That's the best advice I've got for you to keep up with these level 4s is it looks like it wants to go up, and maybe it's going up the next 1 or 2 days. But really, the best forecast is only going up for a little while today, and it's going down into tomorrow and the next day. And then as a backup for kind of like trend following, if it takes out the 5650.75 E-mini S&P 500 March futures price, it's probably down in tomorrow and the next day. So write that down. All right, so but I just want to warn you, we could be a little bit sloppy, and it might actually be up tomorrow instead, all right? Now, zooming out for level 3, the level 4s are just day-to-day pops and drops. They're intra-week kind of buy, sells, intraday even, that kind of I call it very short-term to extreme short-term trading, okay? Now, for short-term trading, my definition is that's what you do during a month or for a month. Now, that's much shorter, faster, more frequent than what Wall Street thinks of short-term, okay? I got that from commodities because commodities are normally a short-term kind of trading thing. At any rate, we might have topped for a level 3 this week already. That's one scenario. The other scenario is no, today's earliest and it's going to top in a matter of a few hours or, near the Federal Reserve, and it's done and over with. However, there may be there will be future level 4 upswings, downswings. There will be future level 4 bottoms, tops. There could be tops that have more upside than what we've seen. It can go higher. And what it could do is extend this level 3 trend that's, again, like a monthly buy-sell signal, a monthly trend. I have an upside target that it touched it right there, okay, on March 17th. And backed off. So get a gold star, or at least it was close enough. But it's still valid all the way to around 58.20. I may have some alternate on the daily chart or something. I forget. There may be some other price levels, and I may have them on the S&P 500 cash. But I just want to warn you, there's upside potential. I said all along, I want the market to come back towards 5,700, and maybe it goes into the 5,800s, but I said I doubt it'll go to 5,900. And what I wanted is move up to 5,700 and all the way back down. And I think we're going to do that. I think we're setting this up that the American people want to sell the stock market. By the way, this morning, John Authers made a comment. There's evidence out there. Funds have been aggressive selling U.S. stocks and buying European stocks. And I was on someone's podcast yesterday and made a comment. The dollar index, part of that decline in dollar index was money being sucked out of the U.S. and some of that's going to Europe. Okay, and then I read John Author's thing, and I'm starting to see some of the statistics. I'm on the right track. The model's on the right track. Okay. At any rate, what we have is we don't know for sure will this level 3 top occur today if it isn't already in place, or is it going to wait till later in the week? Is it going to wait to even early next week? But ideally, it should top this week. So how can we deal with that? Well, you could do a little trend following as a backup, meaning sell on the way down when it shows some weakness. Let someone else sell first instead of being the trend timer and picking the top, all right? But so what I'm doing is, once again, using the 5650.75 that if it trades below that, not only do I think the next level 4 swing is down into tomorrow next day, but I'm also thinking the level 3 is topped and that trend is down into next week, meaning the future level 4 up and down swing zigzags are going to have an overall downward bias in order to help create that level 3 downtrend in next week. And how much downside? It can go to 54.70 all the way to 53.47. Don't know for sure how low, but at least thinking it can take out the 5,500 level, okay? For this next level 3 downtrend. So I think we've seen this zig up. We're going to have a zag down, and there's going to be more time going down and more downward price pressure than there will be to the upside, but it may still move a bit higher on us yet before this all gives in. So watch that 5650.75. In the meantime, if you're feeling bullish, go for it. Just realize it ought to be topping now. It's done enough, but it's not quite right. And not everybody's on the same page here well enough yet. and we have to deal with the Fed Reserve, whether that brings in some other type of an excitement. By the way, the intraday indicators act bearish for that chart I just showed you. Now, this is the hourly chart of the S&P 500 cash, and we do have this gap in the 5660s area, okay? And that was yesterday. They may want to pump this higher today, get into that gap, and that also be close enough for a failed truncated level 4 top, meaning ideally, if this isn't a level 4 top, then ideally today it ought to snap back to that level or higher, then down. And it ought to do that today. The downside could wait until tomorrow, but at least get the upside out of the way today. So do watch out for that. But I'm thinking all they really might want to do is take it back to that gap, then they're going to sell it. And if they take it below that 56.50, 75 on the futures, and I'll give you the cash is 5597.76. Goes below that, I don't think that's a good thing, at least for the level 4s and probably for the level 3. Probably what they're then going to do is target the gap here on March 14th, putting it down closer to the old downside target of, say, 55.54. So write that down, keep that in mind. Interest rates are not doing anything for or against the market here. And yes, they still have objectives to 4.5, but it's not working. It's taking too long. I don't know if it's really going to do that. And I don't know if the Fed's going to help out there or not. I'll update you on the Bitcoin and the dollar and stuff here a little later today. And I've lost my train of thought here. I was trying to figure out, I guess there's no input to the stock model for any of those other markets that's really going to cause any problems. Let's go to the daily chart and go to the S&P 500. And yes, it can bounce off the 5-day average. So if it trades above yesterday's high, it could take out the prior day's high, go to a new high for the week, and run to the 200-day moving average around 57.43. But I think it's going to bump its head and go lower. Meanwhile, if it goes below yesterday's low, I think it's over and done with. It's going lower next week. NASDAQ 100 futures, same story. It might bounce off the 5-day average. I hope it's not going all the way up to the 200-day average at 20,424. That means more upside. And that means I got to wait and delay because I'd kind of like to sell the downside for next week or two. All right. But if it starts going below yesterday's low, okay, on the March futures at 19,604 and a quarter, I think it's a negative sign. This indicator isn't quite overbought. It's kind of too far above the mid-range. It may not be the best sell signal, but it's trying to roll over for a sell signal now. If we go to the daily, Dow Jones bumped its head on the 200-day average, pulled back. It may have to go above the 200-day average yet, then down. But if it takes out yesterday's low of 41,415.43, I don't think that's a good sign. I think it should go lower into the next day. All right, let's go to the weekly chart now, and we'll touch base on some of those larger trends. And basically, I got to do away with this target because I can't see how low it was there. Yes, it can bounce some, and maybe it bounced more than I think, well up into the 5,700s here for the S&P 500 cash, but I don't think so. I think it wants to continue to go lower into next week. It may go lower into April 14th for that level 2 bottom, and then it bounces for a level 2 in April to early May, and then it drops for a more important level 1 along with level 2 bottom for May, June, July, and that bottom ideally will be lower than the lowest price we're going to find last week, this week, and the next few weeks. So in other words, the market may go lower in May, June, July, but we might have a sizable correction against that during April into early May. The weekly indicator is oversold warning. We should be looking for a bottom. We should wonder just how low it can go. It might put the brakes on. It's overdone it. But gosh, in my mind, I think it's going to 53.47. If it doesn't do it in the next couple of weeks, I think it's going to do it by May, June, July. And it may go much, much lower than that, okay? Any rate, give me a positive week here now in the next few weeks. That's probably a level 2 bottom, and we're probably going to see some stability and recovery. And a level 2 rally would be a period of time of maybe better news and calming down with the Trump MAGA stuff and Republican stuff, okay? That kind of thing, maybe calming down the world with Russia, Ukraine. But apparently bad news will be right back again by May, June, July. And we may learn the news doesn't really get much better going in April. It doesn't work that well. And I am nervous of a 1987 type pattern when this market might drop 30 some percent off the record high and accomplishes all of that right into May, June, July. Okay. To wrap things up, to go back to the beginning here, again, we got to deal with the Federal Reserve and how the market wants to play intelligently or irrationally. We don't know. And this is the 360 chart. What chart was I showing for? I was showing you apparently the 12-hour chart before. This is the 360 chart. It's in our better upside target, actually, but still has that upside potential 5,800. I want to see it pick its head up a little bit. But I think looking farther out into next week, I want it down, down, down. This is oversold enough. Warning, it can bounce today. And again, I could be wrong that it's just going to bounce for a few days, that it's not going to bounce just today and then down. It's going to bounce for a few days. And again, just watch that low I gave you, the 5650.75, or on the S&P 500 cash. Use the 5597.76. A move below that, not a good sign. A close below that is even worse, okay? And so that's what I'm looking for, folks. And have a great day. And I may or may not update you after the Federal Reserve here. And if not, I will see you tomorrow morning. And I will do the European stocks here in a little bit and dollar and the outside markets here in a little bit. Past results are not necessarily indicative of future results. Have a great day. Thank you.